Hello. Mic test. Hello, guys. So I'm just checking in if I'm live on both YouTube as well as TradingView. If you guys have joined already, I would like to hear your response in the comment section. Obviously, testing in if the mic is working perfectly or not. So I've got an alert already. FTs. I'm opening some incognito tabs just to check in if there are any comments on TradingView. Sometimes there is an error. Looks like nobody has joined in from TradingView yet. I'll wait for a few more seconds before we begin the webinar. In the meantime, I have got an alert on EURUSD. Let me quickly check that. EURUSD. So let me begin with a very quick introduction here. And yeah, before that, let's get done with the legalities. So here's the quick disclaimer suggesting that all content presented here is purely for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading or investing, you yourselves will be liable for your profit loss or loss of profit. Right? With that out of the way, now let me give you an introduction about my work here. So my name is Neerav Yadav, as you guys who are following me for some time from the past webinars would have already known. And I'm the admin and owner of this website 50 eyes market analysis 50eyes.com and the YouTube channel called 50 eyes market analysis, where I present my market views on various different markets including commodities, indices, Forex, cryptos, etc. I'm a trader first, and I also do mentoring as my side business. Also, I am the author of the book called Think with the Markets, which you can check out on Amazon Kindle. Instant access is available because it's an ebook. One of the more noteworthy points about my work thus far is that I have kept a track record of all the forecasts and analysis that I've done, and for 6+ years it has stood above 80% accuracy. This can be checked by visiting 50s.com/forecast-accuracy, and you can check that the accuracy has stood for 2016 83 something, 2017 87.5, 2018 is 84.61, 2019 is 84.88, 2020 is 88.52, 2021 is 82.22. So that is a quick rundown of my work, and with that out of the mind, let's head over to the way we will conduct this webinar. So the way the webinar will be conducted is I will go over the charts of Euro USD, EURCAD, USDJPY, EURJPY, crude, gold, S&P, and Nifty. Oh, and of course, we'll have a quick look at Bitcoin in the end. Once I've discussed the chart, if you have any doubts, you can just type in the comment section. If not, then we'll just move ahead with the next chart. So that is the way we will conduct the webinars. So let me just quickly go over to the chart of Euro USD now. And if anybody out here can confirm if the screen is visible and the audio is good, that would be nice. Both either on TradingView or what you call YouTube, because we are live on both platforms. Okay, so let's begin our discussions. First of all, we have on chart the chart of Euro USD. So in Euro USD, we have for a long time a running analysis suggesting that we have a possible wave Z to the upside remaining. And based on that, we had two hypotheses last time, right? But the conclusion last time when we discussed this chart was that we believe that some more upside is remaining. So one second, guys, let me just quickly enter some long positions on Euro USD first, because I just want to add longs here. Let's say the stop loss around 1.04444. Stop loss. Okay, so that's good enough. Now let's move ahead with the analysis. So as I just mentioned, I have just initiated some longs on Euro USD. So let me just discuss quickly the bias for doing that. So the bias is that I personally think that we are in a WXY sort of correction where the W is here, X is here, and the Y is complete over here, right? With that complete, we have further two analysis. First analysis is suggesting that the X is complete here. Second is suggesting that the X might be continuing, right? So both analyses were suggesting that there is a Z wave remaining to the upside. Okay. And those of you who are not much familiar with what I'm suggesting here, W's and X's and Y's, etc., etc., I'll quickly like to point out that the WXY analysis basically is the most basic of Elliott wave analysis. It suggests that the market in a corrective structure would move something like this. Right. So the first leg up is called a W, second is called a Y, and the next leg is called a Z. In all these three waves, there is connection. The connection is the connecting wave called X and the connecting wave called X. So that's what you call a WXYXZ triple zigzag correction. With that in mind, if the analysis is correct, we expect the market to at least take out the high of 1.05919. So I'll just push an alert over here, right? So above that high, I would like to trail the stop loss in profits, right? And there are some other things we can do. For instance, we can measure the W and project it from the end of the X, which is this part, which should give us some rough what you call targets. But I'm not really interested in doing that right now because I do not know how well it will hold in the live market conditions. So I will just play as we go along with the minimum expectancy of the market taking out the high of 1.05919. So that would be it for Euro USD. Let's see how it goes. And for right now, the current longs, I have my stops around the low of 1.04444, which is basically this level. So currently longs on our USD. If there are any doubts on this chart, it would be nice to hear some validation as well of how much did you understand of this current commentary or doubts. So I'll just wait for a few seconds. After that, we will move ahead with the next chart, which will be the chart of EURCAD. Does not look like there is any doubt here. Let me see one thing very quickly. Somebody is asked on YouTube, why are you not considering this as an ABC correction? Because it does not fit the guidelines of an ABC correction. ABCs are 5-3-5 kind of moves, and if you try to count this, there is no clear 5 here. Internals are important. You can't just say everything that looks like a zigzag in ABC. If you want to check the internals, I think I have discussed it in one of the past webinars. Anyways, let's move ahead with the next chart, which is the chart of EURCAD. Let me note down the time here. So let me load the chart of EURCAD on screen. There it is, the chart of EURCAD. At this point, pretty much we can invalidate the past running count which we had, which was that we were assuming that the move to the upside was a possible diagonal. The reason for getting rid of that count would be that this market has pretty much blown way over the expected price movement. Generally, we wouldn't want the market to see much higher move than the white trend line, but it has gone way too much up. So for now, I would like to consider the fact that this market is possibly doing something else, right? Let me have a quick look at what are the other expected movements we can consider on this market. It looks to me like a possible corrective structure moving in the upward direction. Secondary consideration, which I'm thinking, is that we may have a possible diagonal in play on a lower time frame, and then an simple impulsive movement in the upward direction. Let me see if we can fit the counts here. Let's see. Does not look like a proper count here. Neither does it look like a proper count there. How about this? Then there is no overlap. Here is the overlap over here. Mm-hmm. See. So the initial phase or the initial movement of this market looks a little bit like a correction to me, but the basically this part is suggesting that we are progressing in a correction, but the remainder part is looking very much impulsive because of the strong upward movement here, right? So I'm trying to see if there is some other point of interest we have not checked. Let's see. So this is our point of reference. Impulse still here. Correction can be considered complete here or here. And then next leg up, which is taking itself as an impulse again, 1, 2, 3, 4, 5. And then a correction again. So ABC for A and B and C. or A, B, C for 1, 2, 3, 4, 5, which does not seem to be a very fitting count for your consideration. 3, 4, 5 for 1, but then does not fit as a 2. Seemingly, I'm labeling everything here as these days as a WXY. Okay, anywho's, Forex markets generally have the tendency to remain complex. So we'll quickly get rid of the current count on this chart. We have already done that. These are trend lines. Yeah, we will try to experiment with other times. That's true. But also other times you will have to consider. By the way, I don't know what your name is, and it's awkward to report or what you call reply to somebody with the name Watch YouTube. I would insist that you use a proper ID next time. But anyways, the problem that will arise if we do much earlier is that the US audience would not have probably woken up. So that's why I'm experimenting with this time right now. 1 second. Talking while doing it made me consider an incorrect thing here. Yeah, that's the count. Okay, so that is what I think currently of this market. Okay, let me do some more labelings here. So this is my current outlook on EURCAD, right? And I will try to figure out some other points in this particular analysis, but right now from what I can see, this is the most fitting count that I could figure out on this market. A little bit surprisingly, I think that the setup still remains the same. So the setup still remains that we will wait for this green channel to get broken to the downside. Once this green channel is broken to the downside, then we will look for some shorting opportunities because the WXY is expected to be complete once this channel has been taken out. So that's still the setup. If you guys remember, even when the diagonal was considered, that was the same setup we had considered. So that would be it for EURCAD. We'll wait and watch for this sell setup to clarify itself, what it's going to do, what it's not going to do. Let's finish this analysis here. If you have any doubts, you can just post them in the comment section. Else, let me move on to the next chart, which will be the chart of USDJPY. USDJPY. Okay, so here we have on screen the chart of USDJPY. If you guys remember, last time when we discussed this chart, we had the understanding that most likely either the down move was complete or it had one more down leg remaining. After the analysis, I re-looked at the chart and I realized that it was possibly continuing in the upward direction. Is there an overlap? Okay, so we have some updates to do here. So I was, by the way, long after the initial analysis was done in the webinar, and I was able to capture some of this upward movement, right? I exited the longs about 1 hour ago. Half of my position was exited here and half of it I exited here because this was too much of a retracement for it to be considered a still intact uptrend. So I was able to catch some of the up move, not too much. But right now, let's quickly put some trend lines here and see what the market is suggesting us to be the next possible movement. Okay. So right now, what I think is happening here is that we are seeing a diagonal formation which is just completed, right? And after the completion of a diagonal, we will see a corrective leg down, right? The corrective leg down we generally expect to see completed within the 50-60 region, right? Within the 50-60 region, that means I'll just draw the 50-60 retracement box here. So USDJPY, no longs for now. We wait for the market to form possible reversals around 50-60 region, which is the level of 135.673 to 135.254 using FXCM data feed. So by the way, keep in mind it's not required to go and reverse from this zone. It can literally reverse from wherever it is right now, little lower or somewhere in the middle as well. Right, so keep that in mind. We have just marked the most important points basically, right? But then again, we are doing analysis. That's what we can do. Mark the most important points. So USDJPY wait for longs. We have marked the important levels, and the expected progression is like this: either straight up or more correction and then up. That's for USDJPY. If there are any doubts, you can just type them in the comment section. Let me just quickly check. Trading view seems completely empty this time, which is a bit weird. I've never had this kind of a webinar where there is not a single comment so far on trading view. So anywho's, let's continue without wasting any further time. Let me just load out the next chart, which will be of EURJPY. Okay. So here on screen, we have the chart of EURJPY, right? If you remember last time when we discussed this chart, we had the analysis which suggested that this market might be moving in the upward direction after the completion of the C leg down, but we did not have much of a confirmation. Now, one thing I did was I also initiated some longs on this, but I got out with not much profit. I mean, comparatively very less profit. So not much to discuss on that trade. So let's focus on the actual chart here, right? So the actual chart here is suggesting, as we discussed in the last webinar as well, that we have an ABC correction here, A here, and then ABCDE triangle here, and then a down leg. So after this ABC correction, by the way, ABC correction is basically a zigzag type of correction, which is suggesting that the first leg down is called an A, the corrective leg up is called a B, next leg down is called a C. A, B, C. So basically, after this particular correction is complete, we expect the market to move in the upward direction, right? So with that in mind, what I was able to analyze was that in the longer time frame also, we are expecting this market to form a possible triangle, right? So considering both things together, I realized that this market will again form a zigzag kind of move, right? So from that analysis, we are thinking that this is again inside a impulse here: 1 up, 2 down, 3 up, 4 down, and 5 up. After that, we expect a correction here, and then again 1 up, 2 down, 3 up, 4 down, and 5 up, right? So this is the, what do you call, expected progression here, right? So just like the last chart which we discussed, USDJPY, here also we will let the market do the corrective thing. After its correction is complete, then only we will look for adding re-entering longs, right? As a matter of fact, I think we might be able to catch some of the downside here. So I'll just enter quickly some shorts on EURJPY. Let me sell something here. Filled. Push the stop loss near the swing high. Done. Okay, so that's pretty big position. Let's move ahead with the next chart. By the way, I have kept my stops somewhere near this high. My expectancy is that it will break this channel, possibly give a retest and then move down again, or at least just go lower, right? Not planning to hold it for much long. I'll just keep looking at it 5-10 minutes, every 5-10 minutes, I mean. So that's our expectancy on EURJPY. We expect some more downside before we move up. We discussed the whole trade and my reasoning for taking the trade. Nothing much to discuss here. If there are any doubts, you can always post them in the comment section. I will now move on to the next chart. The next chart will be the chart of crude oil. Let me load up the chart quickly here. Oh, so interesting, a little bit interesting. Discussion last time was that we were expecting that this is a diagonal, right? And from this point of reference, we were expecting there was a diagonal. And then the expectation was that the market will move up like this. 1 up, 2 down, 3 up, 4 down, and 5 up. Now this is a bit of a rare occurrence that we have seen a possible failure of the fifth wave in a diagonal. I have noted this on a few other occasions, including a big leg down which was in Nasdaq's 100. But anywho's crude oil, the bigger picture analysis was that we were expecting down leg anyways. Short term wise, we were not expecting it to fall without taking out that high. So what I'll do is I'll get rid of this confusing stuff here, make things simple, and then explain what we are thinking here. Right. Okay, so from this point of reference, we have completed by here. So we were expecting that this was an A up, this was a B down, this was a C up. Right, that was our main theme or main understanding of this market. Now, if this correction is really like an A up, B down, and C up, then we expect the market to go lower for the Z. Right. The second argument was that this B is still continuing to the downside and it can continue till 70-ish levels. So based on both of these analysis, which I discussed in last to last webinar, which was I think conducted last week, Friday. You can check the recording. That will be the webinar conducted on 2nd of December, I believe. So anyways, coming back to the point, there are two sort of analyses which are under consideration right now, right? The first one is suggesting that we can head over straight down for the wave Z, right? Because we have completed the wave X of a higher degree, Y, and then X of a higher degree, and then heading down for the wave Z. The second is suggesting that The second one is suggesting that the B is still under continuation, and that is also suggesting that 70-ish levels should be seen, right? So it is also suggesting downward movement. Both analyses are suggesting downward movement, but keep in mind, although there is a confluence of direction between these multiple analyses, this is a swing type of analysis. So your stop losses will be placed pretty high, obviously near the last or the most recent high. So in this case, as you can see over here, the reward is this much and the risk is double or more than double. So it's an inverted risk to reward kind of trade and a swing kind of trade, right? So that's my take on crude oil. I'm not really interested in adding shorts. Look for some better entry than this one, because as I mentioned, the risk to reward also does not look very appealing. But yeah, the probability of it this heading to the 70-ish levels is quite good at this point in time. So that's my take on crude oil, right? Let's head over to the next chart. If there are any doubts, you can just type them in the comment section, or we'll head over to the next chart, which would be the chart of gold. Okay, so as you can see over here on the chart of gold, last time when we discussed this chart, we had a very simple analysis underplay that we are expecting this market to head higher, right? But we expected the market to first fall and then head higher. Because why? Because we were expecting that this wave one is complete, but after that there should be a correction, something like this, right? Which is exactly what the market seems to be doing. And one important fact, right after the webinar, the last webinar, I was able to catch this fall and make some big amount of profits on it, right? And it was exactly based on the analysis which we discussed right before the webinar. So somewhere here we conducted the webinar, I believe. Let me just exactly check the date and time. Yep, 5th December, Monday. So okay, so I did not mention, yeah, exactly, that's fine. So this is exactly somewhere here we completed the webinar, and then the market started heading lower very fast. So I was able to catch this, like based on the same analysis, that this was a continuation of a flat correction. And those of you who are not familiar with the flat correction pattern, it's a Elliott wave pattern suggesting that once an impulse in the upward direction like a wave one is complete, we will see a correction which looks something like this. The first leg, this leg is called a wave A. Next leg will go higher than the start of wave A, but then reverse back into the price territory of wave A. So the next leg which goes higher than the start of wave A is called B, and the one which goes back into the price territory of A is called C. So based on these analysis, we entered shorts, which was discussed last time. And right now it looks to me like the C is most likely complete. Now keep in mind there is no rule saying that the C is complete here. It could still head lower and finish itself somewhere over here instead of here, right? So for instance, we do not have a confirmation or a clear confirmation for adding a huge quantity of longs, right? So for now, I'll just wait and observe the price action and see if it gives us certain evidence to enter longs in this market. Until I see such evidence, I will hold off from taking any positions in this market, right? So here are the alerts which will make me reanalyze this chart, because at these points of interest, I believe we may have a proper price action with proper labels which could tell us which way this market is going to head now. So with that, I would say that we have discussed gold. I mean, the main theme or the main analysis is done here. I'll wait for a few seconds. If there are any doubts, I'll just take them. Otherwise, we will head over to the next chart of S&P's 500. So here on screen we have the chart of S&P's 500, and the analysis which we did last time was suggesting that we had this diagonal which was completed, right? And after the completion of this diagonal, we were expecting that the market would give us, by the way, the diagonal got completed here. So we were expecting the market would give us in A, B, C, and then the market will head higher. So we were expecting it to be a running flat. Basically, what that means is we were not expecting this low to be taken out, which seems to have been taken out, right? That obviously does not mean that the market cannot head higher from this point in time. However, that does mean certain other things can come into play. First of all, the expanded flat pattern is not seen very often. So I'm not very much interested in adding any longs here. So adding longs would mean that you are assuming this scenario, right? So obviously it is still possible, as I said, and the price action does seem to be like the price action can be counted as having a significant low here. But as I mentioned, I'm not really interested in adding any longs at all on this counter. Secondly, the downward movement can be significant from here, and the reason for that is that if this is not an expanded structure, if this is a B ending over here and a C ending over here, then that means, let me just quickly do this again, and that means we will have a movement like this, and this would suggest that this C is significantly lower than A, which is again a very less occurring scenario. But if this is true, what I mean is that generally this A wave and C wave will have some sort of relationship, generally 1:1. But in this case, it is not even half of A or even 1/4 of A. So by that reasoning, if this is actually a C complete here, then that would suggest that significant downward movements can be seen in this counter from here. And that's another reason for trying not to bother ourselves with the long here at this point in time, even if it's going to go up. We'll just look to re-enter at some later point with more confirmation. So that's my take on S&P's 500, right? No longs right now. Big shorting opportunities are possible, but we wait for confirmation. I personally will have a relook at this chart around the level of 38.75, right? And around that level, I would be interested in considering some shorting opportunities on this counter. That's our quick take on S&P. If there are any doubts, you can obviously post them in the comment section. Else we'll move on to the next chart of Nifty. I'll wait and see the comments for a bit before moving to the next chart. So enough waiting. Let's load up the chart of Nifty right now on screen and get ahead with that analysis or the analysis of Nifty itself. So as you can see over here, the chart of Nifty is on screen, and what we see over here is a corrective structure in the downward direction, most notably or basically an ABC kind of correction, with this leg being the wave A, right? This leg completing the B, and the market then heading lower for the wave C. Now, what I see over here is that, one second. Yeah, what I see over here is that the C wave does not look to be complete at this point in time. What that basically means is that there's one more point I'd like to clarify here before I move ahead with the further explanation. So first of all, an ABC is a zigzag pattern in Elliott Wave terminologies, right? And what you would see is 5 waves which will be called an A, correction, which will be called a B, and then 5 waves, which will be called a C. So because our point of interest is C, which is starting around this level of 18,667, and the date is 7th December 2022, we want to see, or we should be seeing something like this. If this market is really following this count, right? So if this market is really following this count, we should be seeing something like this: 1 down, 2 up, 3 down, 4 up, and then 5 down. And what we have over here on screen is 1 down and 2 up. Somebody has significantly tried to hold on to this counter, probably because tomorrow is the weekly expiry, Thursday. Every Thursday of the week we have the weekly expiry, unless it's a holiday. In that case, it's pushed to Wednesday, unless Wednesday itself is a holiday. Anyways, silly jokes apart. So simple analysis here is suggesting that the downside is not over yet, right? If the downside is not over yet, then there are two ways this market will proceed to the downward in the downward direction. First of all, it can just go down as an impulse. Secondly, it can be a diagonal. Currently, looking at the chart, it looks or is suggesting more like an impulse kind of scenario here. So if it's really an impulse, then 3 should be a little bit bigger, followed by 4, followed by 5. You get the point. And if you really want to go and check the targets, not something I'm interested in, because there are multiple other things that will be much more helpful than some fib targets. But yes, they are there, and suggesting that minimum it should see 18,514 to the downside, right? And further targets will be 18,475, and most important and notable one, 18,450. So these are the expected levels to the downside to watch out for, and tomorrow's session will be interesting because it is a very clear looking analysis suggesting bearishness to continue. That's my take on Nifty. More bearishness expected, and we have just discussed the targets, right? And one more point to note here: this analysis will sort of become invalidated if it crosses 18,620 in tomorrow's session, or in the morning minutes, 15-20 minutes something. So that will be, let's say, your invalidation level. Now I'll head over quickly to the chart of BTC. Given that there has been exceptionally no response to today's session, I don't really feel like asking for questions anymore because I'm not seeing anything on TradingView at all. But there is a chart of BTC, right? And as we have discussed so many times thus far, from this point of reference, we are seeing an A up, a B down, and C up, right? And our level of reversal is somewhere here. So it is very near our level of reversal. There is no solid evidence yet. We will be only interested in longs above this level of 21,100 something. Only above this level we'll be interested in longs, only if the market reverses within this zone. If it goes lower and then reverses, then we are not interested in long. We will have to obviously reanalyze and see what the market is doing at that point in time. So BTC, I have nothing to add here. If longs are initiated, our targets will be around 32,000 and higher levels. So basically, this is the theme we are following in BTC. Nothing really to add here. The market has mostly been sideways for quite some time. That's about it, guys. I hope there is more participation in the upcoming webinars. You can join me on YouTube or TradingView, whatever is convenient to you. If you like the content presented here, you can always hit the like button on YouTube and rocket button on TradingView. That will be much appreciated, as that helps the algo push the content higher. And secondly, if you enjoyed the content and found it of use, share it with at least 2-3 of your contacts in your social media, Telegram, WhatsApp, whatever channels or forums or whatever things you use. Okay, and make sure to join me next time. That will be Friday, 2 p.m. GMT. Right, I will post the timestamps as well as the timing for the next webinar in the comment section. Hope you guys enjoyed it and hope you guys share it. And that would be all from me. Thanks and bye.